Hello everyone, welcome back to our first episode of season 4, Ask Someone Else with myself, Property by Kazi. We were away for a little while for the Christmas break, but it's great to say we are going to be back with a special guest as always to talk all about property. I'm going to get my guest in straight away to make sure we got no technical issues as we come back. But in the meantime, if you're new here, if you haven't been in before, make sure you add a friend, anybody that you know that will be interested in a conversation all about property. So I've just added them in now. Let me see. How you doing? You okay?
Hey, how you doing? You okay?
Yeah, I'm not too bad, thank you. We finally made this happen. I think it's like our third attempt, right?
I think the last time we caught COVID, didn't
I
we?
think you had COVID. I think I had COVID at a point, and we've been trying to make this happen for a while. So for those that don't know, every Sunday we took a little break over the Christmas period and the COVID period and a couple of other periods. But basically every Sunday I get a special guest on to talk about property, their experience, and hopefully it's an opportunity for those that are looking to sort of like hone their craft or find a little bit more about a certain vocation in property and something that they can learn about. Funnily enough, to give some background, your page is one of the first pages I actually followed.
Oh,
That's
really?
cool.
One of the pages that inspired me to actually keep putting out content and keep doing things. I think you've been doing what you've been doing for how long ago? How long ago did you actually join Instagram and start your page? Oops, have we lost you there? I don't know what's happened. I don't know. I think we may have lost Hannah and George. Let me try and add them back again. For the viewers that are in here now, can you currently hear/see Hannah and George? Can you let me know if you are here, or are you just gonna leave me talking to myself? I don't know how long the delay is, so I have to keep talking until somebody responds to me. You can't see them; they've gone. All right, let me try and add them again. Bear with me. So yeah, I've just tried to. Are you back?
Hello.
Yeah, I don't know what happened then.
It's
Sorry.
technically, it has to. It's not live Instagram if there's not technical difficulties.
Hopefully that'll be the only one.
We did hear what you said though. So we've had our Instagram account since June 2019. To begin with, we went hell for leather on it. We were, every day, every 4 hours or so, we were putting stories out, posting every single day. Then we got very, very busy, and it sort of got put to the back foot a little bit. However, I do always preach social media is very, very important, and we have got plans to get back on it very soon.
It's hard balance being busy in real life versus being busy on Instagram. And both important. To be fair, the real life is probably more important, but they are chicken and egg, because I'm sure if you didn't put all of that effort in at the beginning of your sort of social media journey, you probably wouldn't have had that, that effect, that spiral effect of, increasing your business.
Exactly. Social media was very, very powerful at the beginning to get us kick-started. It's unbelievable the amount of opportunities that come from it that you don't even know until you get into it. And then you get yourself out there, you get invited onto other podcasts, that boosts your brand even more. There's just so many different things that you can get from social media that's really, really powerful in order to boost your brand. I mean, our mailing list and our investor base has all come from putting ourselves out on social media, documenting content, creating content, showing people, we're competent, and then people want a bit of the cake then, don't they? So that's what I feel social media is. It's basically reaching out to loads and loads of people, rather than going to a networking event where you can meet 30 people in that room and you're probably not going to get around everyone, whereas you can do an Instagram live, and for example we've got 30 people on here now. So it's powerful how many people you can reach from social media.
Yeah, it is, and you can meet people from all over. You can have conversations, and I think a lot of the social media side of things is it's building your credibility with all these different people. That a lot of the time you might not realize somebody's been following you since the start of your journey. So like you mentioned, June 2019, and they might reach out to you June 2022, but you
Yeah.
built like a track record, a credit history with them, because a lot of the time when people are talking about how do you start out without that credibility, that Instagram actually and people actually see, and these people are doing what they're preaching, they are practicing what they preach. They're kind of, you can also take people through the journey of, okay, like you're thinking about investing, let me take you through what a typical deal or an example of a deal looks like.
Yeah.
Yeah, and I think building that credibility as well, it gives you a platform to be able to show just the absolute highs and lows. Like you said, it's the journey end to end. It's not just show. Because I know when we started, we very quickly realised it wasn't going to be as easy as we thought we were going to be, because it wasn't all like plain sailing that people were painted it out on, you know, some of the courses and some of the social media pages that we followed. So by being able to show, you know, our highs, our lows, the things that we've overcome, I think shows you're able to show people as well that you build that relationship and you show that honesty.
Yeah, you're giving people that value. You're sort of going, right, this is a challenge we've had or a hurdle we've had, and this is how we've overcome it. And that's where I think value is provided the most.
Mm-hmm.
Yeah, because I think also like what you mentioned as well about showing the ups and downs, like that integrity is kind of sort of second to none. So when people actually can see that, you know, they can really see what you've gone through, they can see your journey, and they can see how they want to be part of it. Because like you just mentioned, you know, a lot of the, you know, the courses and the mentors and the gurus, and there's always a buzzword. It could be like other people's money, it could be, you know, financial freedom, it could be something. It's always sold as very quick. But obviously, when you're doing it, you realize that even at the beginning, even if you're looking for investment, and we'll go back to actually what you do and what you've done, but, you know, sort of raising investment is one thing that a lot of people want to learn how to do. How do I reach investors? You'll see that you might speak to 20 people and still raise no money, and they might all have money, but it's just, okay, how do I actually show that I'm the person to invest with?
Yeah, it's all it's like, as you said earlier, it's a compound effect, isn't it? It's exactly the same as putting your money in a bank account with an interest rate in it, and it pile up over the years. It takes time to get that traction, and you know, as soon as you've got that traction and it compounds over time, that's when you start getting the interest. But to begin with, you just got to get going. That's what I feel like. You've got to get going. You've got to put yourself out there, and it will compound over time, and the results will start showing.
Yeah, because even for a lot of people, everybody's at a different stage of their journey, and some people are, you know, still they're just going on viewings, and they're almost doing what dry runs, just seeing, you know, if I had the money, where would I be at, what would I be doing? But even if you're at that stage and you're sort of chicken and egg, like, look, I haven't done my first deal, but I can't raise the money, even just showing people the type of properties that you're looking at, the opportunities that would have been there if you were to get the money. So for those that are kind of starting out, I think it's really important, you know, just to get out there and be proactive. But by talking about starting out, let's actually, for the people that maybe are not as familiar with you, if you can explain sort of what your backgrounds are, firstly, sort of how you got into property and what you've done over the last couple of years.
If I give the background, then you can talk us through what we've done.
Yeah, go for it.
So George and I actually met, we were both travelling. So George from the Isle of Wight, I'm from Caerphilly in South Wales, and we met in Malaysia. And at this point in time, I worked in corporate IT. I'd done project management, and towards the end was account management. George had done a degree in law, and then actually when you did some operations directing, didn't you, in Australia, but when you came back, you didn't want to be a lawyer and become hands-on with as a trade. So you was a plasterer, wasn't you, plasterer and renderer. But when we first met, both of us wanted to go into business. We couldn't just really figure out what we wanted to do. And we played around with so many different ideas. And I think we stumbled across a YouTube video on rent to rent. And from there, it kind of just spiraled. We'd been doing long distance for just over a year, I think it was. And George was just about to finish his job. So I'd kind of said, well, now's the perfect time to move to Wales, and, you know, why don't we open this business and give it a go? And if it works, great. And if it doesn't, then you just get another job. But at this moment in time, it's the perfect time to try it. So we opened the company.
In all fairness, we weren't going to let it fail, were we?
No, but we opened the company, and George was full-time from day one. I only actually left my full-time employment in January of last year, 21. So I've been full-time for a year now. And we did it like that. So we had my full-time employment income, you know, covering us while we were finding our feet. And I think that's a big thing that people often miss, is everyone gets so excited to leave their job and start their own business, but that can be to a detriment in so many different ways. So when we bought our first house, you needed to think of your mortgage, and us both being brand new, full-time, self-employed wouldn't get you past that mortgage. So we built it up gradually, and we started off primarily sourcing. So we started in the June doing the sourcing just so we could build our own capital, and we didn't get our first deal until September. And yeah, from
But
there on in,
that was like solid as well. Like when we say we didn't get our deal until September, what we mean is we were out viewing every single day, tons and tons of properties. Like it took a while to understand which ones are the perfect criteria. Like at the beginning, you're viewing 40 because you don't understand what you're viewing, and then you knuckle it down. You're only viewing maybe 5 or 6 a week. And the ratio goes down loads because you know exactly what your criteria is and what your focus is, and that's when I feel like you really become successful, when you have that focus and knowing exactly what your niche is, and you've got what's the word, tunnel vision on what you're going for,
to know what to say next, what you're actually looking for.
A lot of things you touched on there are things that I often, I feel like I'm repeating myself all the time, but definitely, that there's an idea, and particularly on social media, there's like a stigma that obviously, we're in a generation where everybody wants to be self-employed and everybody's, but there's also a balancing, risk and reward and timing things at the right time, because to become, self-employed or to run your own business, it requires cash flow. And if you can bridge, either a skill set you've already got or a job you've already got to allow you to actually get the borrowing, you're going to be in a way better position than somebody who's like, right, I'm going to jump in head first without a plan. So I think definitely, that is a good takeaway point for anybody that is looking to get into property investment. Just to look at what point in time it makes sense to potentially leave, your full-time job, if any. And I know some people that do amazing things in property that still work full-time, have a full-time job, and they find a way to structure. Because if you're, a contractor earning hundreds of thousands of pounds, yes, it might sound like a great idea that I want to be self-employed, but you have to look at what point in time is that income from the property going to outstrip your income from employment. And I think that's really good advice. Also, the bit that George touched on as well about specialization.
Yeah.
All of your deals have, from my understanding, have been in South Wales or predominantly South Wales. And I think that's another really key point that I think a lot of people miss, because if you're trying to do deal appraisal in 20 different locations all over the country, the effort, that it's going to take you to even appraise one deal versus you looking at 10 is probably going to be the same thing, because you don't even really have to do comps at a certain stage, because you know the area, the road, the catchment area for the schools, the road that they look almost identical, but one's just seen as a better road in the area. So the GDV on that one is an extra 10,000. So you can pay that little bit more and still make the money. So I think that specialization element is really, really important when you're starting out, and to be honest, really at any stage.
Yeah, definitely. I mean, I think it's
down to strategy.
I was just about to say, even down to strategy, the exact strategy that you use, and even within an area, like your niche sort of area as well. Like we've obviously in South Wales, we can go 1 hour over to Swansea, because we're like Cardiff area. But really, to begin with, we stuck very close to home and stuck within that sort of valley that we wanted to work in. And then as soon as we sort of overcome that sort of valley and got really great with that valley, then we moved on. But I feel like you need to tackle one certain area and strategy first.
Outwards. Yeah. And that's one of the reasons why, like early on, I was like, I relate to you guys, because that was kind of always my strategy, that look, let me work on an area that I know, and when I feel like it's become a bit saturated, or I can do more, or my skill set is enhanced, then I'd sort of cast my net a little bit wider, so to speak. But I think early on, there's so much property in, whether it's South Wales, whether it's London, whether it's Manchester, Birmingham, that it's really hard to exhaust the deals. Like you will get to a point where they come hard to find. And we're going to touch on this actually, what you think about the Londoners coming down to South Wales and trying to take deals. But there's so many deals out there that I think you can't really get lost in. I'm going to travel all over the world. Sometimes that specialization and focus is what can sort of set you above the competition.
Yeah, and I mean, a lot of people as well. I just wanted to touch on this. Like, a lot of people think like, in their certain area, the BR strategy is dead, and a lot of people are saying this, but it may be dead in regards to the standard refurbishment. But you need to be creative. There's so many other things you can do. So, for example, in South Wales, the prices are going very high, and it's becoming quite difficult now to actually get that cash flow. So, you know, look at things that you can do to add value in different ways. Can you create multiple units? Can you create extensions? Can you make a high-end flip? There's so many different things that you can do in order to add the value there, which I think BRR isn't anywhere near dead. I mean, people are doing it in London, and that's the most expensive place. So I think, you know, I think BRR is nowhere near dead. You just need to get a little bit more creative and adapt to the market.
I'm sure like 80-90% know what BRR is, but there's, you know, for those that don't know, can you give a bit more insight into what that actually means?
Yeah, so BRR stands for buy, refurbish, refinance, rent.
It can go on. It can keep going on.
They keep giving you more art. Like every week, there's a new art.
Yeah, in a nutshell, and it's our dominant strategy that we do. So we buy properties with cash or bridging finance. They typically run down. We will then add value by refurbishing that property, and then we can remortgage at that uplifted value to bring out as much cash as possible, so we can recycle and purchase the next property utilising those funds.
Nice. And I think, yeah, something that George touched on that I'll go back to is that, you know, whenever you're doing these deals, like obviously in an ideal world, you can just buy somewhere, new kitchen, new bathroom, tidy it up and you increase the value. But the more obvious it is, the more likely the lower the margin is, because the more competition there'll be for property. And one of the best things that I've ever learned in property is that you make your money when you buy. And that doesn't always mean buying below market value. That can mean buying, and like you just touched on, identifying something that can be done with the property that your average home buyer has missed out on. So be that, you know, maybe it's a 3-bedroom terrace that you think, hang on, if we could do this as a HMO, we could do it as a luxury home with the right extensions. It could be internal reconfiguration to make it a more attractive, you know, layout for modern living. But a lot of the time, you know, you have to be able to add that back yourself. And if you're relying solely on just buying below market value, you know, there's a lot more competition. So you're going to be one of those people just saying it's dead, but it comes from hard work, it comes from an element of expertise, and it comes from a lot of trial and error and making those mistakes on earlier projects.
100%. We're doing quite a few flat conversions at the moment, and I'd say probably 4 out of 5 we bought them for the market value, because we bought them at the top end, but we knew what our plans were for them, and by changing them to 3, 4, 5 flats, we're selling one flat for the value of the property we're buying them for. So it's that on a bigger scale.
And having that, it takes a little bit of time, but having that knowledge when you walk in to sort of know exactly how many units you can get in, it is powerful, really, because when you walk in and you know how many units you can get in, you can get that offering straight away, and try and get it over the line for asking, and then it's done. The deal's done, and you know that you can add that value.
Yeah, there's a few reasons why I love flat conversions. Number one is sort of risk mitigation because of multiple exit strategies. So you'll cost it on the basis that, okay, worst case scenario, you know, maybe, like you said, worst case scenario, we're going to have to do a full refurb and we won't even get the planning, but we might break even or lose a little bit of money if we have to. Second is we'll get 2-3 units and we're going to get X amount of profit because our GDV is X. And if it goes amazingly and we get 4 or 5, then it shoots right up. But that strategy means that you can take a bit more of a risk because, one, there's more of a reward, and then 2, you know, that you've also got different ways to mitigate any potential loss. And I think, yeah, the other great thing about flat conversions, they help you build up a pipeline as well, because in COVID, planning is really slow. I don't know what it's like in South Wales, but in London, it's like they just decided to turn off the emails and the phones.
They've been a bit better. They have started, that I know it was always going to slow down over Christmas, but they're still within a decent time frame. But, you know, what we've actually found doing the flat conversions, They're so much easier than the small buy-to-let refurbs. I think we had like an immensely stressful 2021, and we probably had every builder problem you could come across, and every, materials increasing, builders not turning up, COVID, you name it, we faced it in 2021. But our flat conversions, I mean, they just touch wood. They're just a completely different element. I know you get it's a different type of builder doing them, but it just seems like you do have the same level of, stress. The risk's a bit more, but the reward is so much greater. And I just
definitely. And with a job like that, it needs to be run with a schedule, really, in a sequence. And I feel like that's how it comes out a lot easier and goes a lot smoother. But just touching on exits quickly as well, and another thing I love about flat conversions is what we were saying about exits is that you can obviously exit on a BRR again and have like essays. We've just recently come into the end of one of ours, and we've actually got an investor that may be interested in buying the flats and then renting out as an HMO. So that there's so many different exits you can look at, and it's powerful the way you've got all those different options.
But I think that's also what's great about property and the opportunity to learn, because like I said, you learn at doing the more straightforward BRR in terms of just straightforward refurbs, and then moving into the conversions. Potentially, there can be all sorts of things that ground up, and then you learn as you move forward. But I think that's the other good thing about social media, that people can actually see your track record and see what you've done. And because you guys are very transparent, and like there's a lot of transparent people on Instagram. You guys are definitely really good at that. People can actually see your journey, and you show them that it hasn't gone from, you didn't just go day one and say, right, we quit our job and now we're buying 2 houses and we're building 10 flats, because it doesn't work like that, because you have to kind of hone your craft. I think that goes back to what you said about the issues like that you face maybe with the trades or the project management side of it, or the managing timeframes. You learn that on maybe what would be called an easier project, even if now you view it as that was a straightforward project. But I think you're really lucky in that your backgrounds from you have a lot of the skill sets that are a property, because you've got the construction background, you've got the sort of the financial management and modeling background, the project management background, and there was one other that I can't remember what it was off the top of my head, but you have a lot of that. And I think I just wanted you to speak on how important you found what many people would deem as non-related experience, but how you found your previous job and your previous experience into pivoting into property.
To begin with, to be honest, my building background was really helpful, wasn't it?
It was. You only really had to adapt. Obviously, prices are in different areas, but George was able to call BS quite quickly and, have a bit more of an understanding. When I first started property, like I don't hide this, back in 2019, like a house to me was 4 walls. Like I couldn't tell you about a damp proof course and a rewire, and I definitely couldn't cost a refurb. So I definitely would have 100% struggled without you.
In all fairness, like when it came to the costing, it's completely different to where I used to do my build work. So that was a challenge to begin with, getting everything and the costing right and stuff like that. That was quite a challenge. But in terms of like how things should be done, it did definitely help. But even Pete. Sorry,
the dog's happened to go out. So George's knowledge definitely helped him with the pricing. For anyone who's in the same situation, what we actually did very begin with, and again, it's a balancing act because of, builders are their own breed. So you do have to be careful how you work with them. But we met with quite a few builders to begin with. And I said, we're viewing these properties in the areas. How much do you charge? Standard terrace, 3-bed house. How much do you charge for plastering it all? How much would you charge for a rewire? And over time, and as we started to pick up more properties and do the refurbs, we built pretty much a costing booklet in a spreadsheet. So we built this log of trades and prices. So that became our little black book, didn't it, over time?
Yeah, and it constantly adapting as well. Material prices are always changing, labour prices are always changing. So it's just a Google Drive document that's just constantly evolving.
Did you find that when you were costing, were you just, because different people do it in different ways. I'll tell you how I do it afterwards. But were you costing like per square meter, or were you kind of costing on the type of property that, look, for a 3 bed, a rewire is X, and what sort of costing did you use?
So it's funny, really, because I don't know if you've ever been to Wales, but all the houses are pretty much the same that we do the BRR on. They're all pretty much standard 3 bed terraces. You do get the odd one that's a little bit bigger or a little bit smaller, but most of them are standard 3 bed terraces. So that is what we run it on. On a standard 3 bed terrace, how much would it cost to plaster the whole lot? How much would it cost to plaster one of the rooms? They're all very similar. If you did get the anomaly, I suppose, of having like a big 4 bed house that you rarely do, you would just put the price up a little bit to factor in for that. That's sort of how we started, and now we understand the costs pretty much off the head.
Common that I get asked in regards to how do you cost stuff, and then I almost feel embarrassed because I'm like, kind of like you, I've done it long enough now that I don't know, like this is how much a 1 bed flat is to refurb. But I think I'm very much that it's, you get bogged down in the details sometimes if you try and cost plastering out per square meter, because really and truly, like, you know, if you've got a good builder, you're kind of going to work with them, and you know they're unlikely going to want to come and measure the house per square meter, or you know, maybe electricians may be slightly different, maybe you pay by the point, but you know, in general, I think if you can have an idea of a top level, it's that same thing of you can quickly very early just say if this house does or doesn't tick the boxes in terms of is it going to be profitable, because you have a real top level idea of your expenses.
Yeah.
And although, you know, if you're amazing with costing, if you've got a background as a QS, for example, or something like that, then potentially going on industry standards and per square meter can be great. But I think if you want to be able to appraise deals quickly, like the way George and Hannah said they've done it, I think that can be a really good starting point. And then maybe, you know, if you go for houses that differ a little bit more, look to have small tweaks that you make to the model. But I think in terms of just being able to, if you're scanning Zoopla, Rightmove, the portals, or you're dealing with sources, or however you find your deals, or you know, the auction houses, just being able to very quickly say, look, that doesn't work, that doesn't work, that doesn't work. These ones are maybes, is, you know, is an amazing sort of, you know, tool to have in your own toolbox, I think. So I think I'm in agreement with how you sort of cost your deals as well.
Definitely. A worry that I find some people have is not putting enough in for their refurb. They don't think they factored in enough. So the way we sort of got around that to begin with was, if we thought something cost something, we'd just have a little bit more of a contingency on it just to be safe. And then when you do that on every single thing, so plastering, a little bit of a contingency, bathroom fit, a little bit of a contingency, you find that you've got a contingency there at the end to back you up if you've forgotten something. And it always seemed to work for us, didn't it?
Yeah, I think contingencies in the current market, well, with material prices going up, material short, you know, that be a must in any budget. And even potentially after you've done it, I think one thing is good to kind of just stress test your deal. So like, maybe what if you have your budget, and what if, you know, your budget goes up by 5 or 10%? How does it look, particularly when dealing with investors as well? Because if you're dealing with your own money, you can understand your own attitudes to risk, but particularly because a lot of your deals, I'm not sure now, but I know early on you were dealing with a lot of investors, it's even more important, because that same thing, going back to the integrity side of things, if you're telling them something, you want to have done as much due diligence as possible to make sure that your numbers stack. And you're not saying, I didn't realize, you know, this cost a.
And it's always great to have, even with the small BRR deals, to have the exit as well, because, you know, you might end up coming to the point where there are things, you are pulling wallpaper off and finding all the walls are coming off, and, you know, you're pulling the ceiling down and one of the beams are all rotten and stuff. So you need to have that little contingency in there. But on top of that is having the exit of a flip. So, for example, if you're having to then leave an extra 5-6K in than you thought, and it doesn't become like the deal it was, then you've got that exit to flip that gives you a good amount of profit. So it's always worth having that flip exit. Just even at worst case, you're still making some profit.
That's good. So if we stick with the project management and the build side of things shortly, from your experience, what advice would you give to a budding property investor or developer that's potentially going to get into managing their first refurbishment?
Oh, we could give so many.
Let's go for like 3 or 4 little tips. Doesn't have to be massive, little tips.
I would say make sure you have a schedule.
Yeah.
But also bear in mind that schedule doesn't always go to plan. Weather, COVID, delays, builders not turning up. You need to be flexible with the builders. If things are, if you've got a head builder that's helping you out with things and they're saying to you, look, the plumber hasn't turned up, you can't go screaming and shouting at him, because at the end of the day, you know that it's not his fault. Plumbers don't turn up a lot of the time. So I'd say have a schedule of how you want it to run, but don't go too much into the detail, because you're going to be wasting your time too much.
Have like a weekly overview, not a daily.
Yeah.
Things always move. So have that flexibility. I think vetting your builder to begin with, like heavily vetting your builder, is such a key point. You can raise the finance, you can find the best deal, but for that project to go smoothly and for you to come out smiling, the pivotal part of that is your builder. So you need to make sure you're finding someone, you've checked their work, their experience, they're communicative, you can get hold of them easily, you get along with them.
That's a big one, getting along with them.
Having a contract in place.
It's like
the most important one.
Exactly.
I would say another big one is having a schedule and scope and spec from the start, so you sort of agree what your spec's going to be, what you're doing. Are you doing a rental, are you doing a flip sort of thing? And if you're getting certain things involved, building regs, you want to get your EPC up, whatever you want to do, flush it out and put it all into a schedule to begin with. Then during the build, you're not going back and forth, delaying things, arguing with the builder about things. Have everything sorted right from the beginning. So you're both on the same page. You know everything's included in that quote. So you're both on the same page. You've both agreed that everything on this page is included in the quote, and then go. And then you get going. Because if you get halfway through and you go, oh, I didn't include that, and then it gets all messy and your budgets are going over, you need everything sorted right from the beginning.
What you were saying about relationships, because if you've kind of taken the time to be clear that, I want you to do X, Y, and Z, you could have a great builder you have a great relationship with, but then if you start asking for stuff that they think wasn't included and you think was, you could ruin that relationship. And that could be the builder that could have gone on and, been great to give you a great price for your next job or your next 5 jobs. So I do think, accountability on both sides is super important, because sometimes I do project management for, other developers, and my quote is very inclusive, and there is a big red, it says, if it does not say it on this quote, deem it as included, because it just means that, look, this is everything we are doing. If for any reason you don't see something you want on here, please mention it, because otherwise it's deemed as not as included. But I think there's some really good tips for those starting out. So just to reiterate, it's vetting your builder, make sure do your due diligence, speak to them, find out, projects they've done, go to some of their previous projects, speak to maybe some of their clients, actually have a conversation with them to make sure, away from just do they do good work, are they somebody that you can work with on a daily basis? Have a good plan from day one. So that's a plan in regards to the scope of works, timeframes, etc. And then also just, be friendly, I think is the other one I kind of got from you. So you have to be personable. If you're like super anal and want an update every sort of 12 hours, the likelihood is you're going to fall out with them and it's just not going to work. And if you try to CC them on an email, it's probably not going to work that well either.
It's about looking after them as well. Once you've got that builder that you've got a great relationship with, you need to look after them. We booked our builder on Christmas to go and stay in the what was it? That place? Manor. The Celtic Manor in Wales with his missus, and he really appreciated that. It's just appreciating all their hard work, because builders work hard, they really do.
There's so many different things. There's so many moving parts when it comes to property, like you mentioned, and they're definitely probably in my top 3 of what you need to make, because it's great to find a great solicitor, but a lot of the time, because of the way it's regulated, you can probably find another one, potentially another broker, same sort of thing. But finding the deal, finding the capital, and having a good builder, I think are the sort of go-to top 3 that, without all of those working together, I don't like a buzzword, but they are your power team. They are like your trilogy of your power team to make it work. So that's kind of how you get your deals across the line and how you make them work. Just briefly, how do you go about, because you sourced how many deals? I can't remember. I saw a number recently, like
Who did the number
ballpark.
In total,
to date, isn't it?
to date, we've sourced approximately 120, 25, 130, around about that.
You know, which when you if you kind of break that down over a 2 year period ish, that's a ridiculous amount of deals. That's, my maths is failing me, but that's sort of like 4 or 5 deals. Do you know what I mean? 4 or 5 deals on a monthly basis. So how have you managed? Because a lot of people maybe don't want to get into or are not ready to get into property in terms of doing their own deals, but want to get into sourcing. How have you been able to do that, and what advice would you have for somebody that does want to get into sourcing?
I think it's kind of the same things again about, being honest, being personable, building relationship. Everything comes down to building relationships. And kind of what we've already covered as well, just knowing your strategy and having parameters and having an area. I mean, when we started right at the very beginning, we wanted to cover all strategies in all areas, and you spend too much time searching for everything that it's hard to find like those gems that you're looking for. We got off to a bit of a slow start, as we've already mentioned, but then as soon as we put those things into play, we were finding deals. We knew what we needed to view, what we didn't want to view, and then from there on in, it's just, being able to stick to your words, going on viewings, putting in sensible offers, actually completing in a decent time frame, and not messing the agents about, because of, once you start doing it and you start picking up quite a few properties with them, they become your own kind of sourcer, because of when they've got a deal that they want to move quickly, they can just think, well, they've bought X amount of properties, they always complete. If there's ever a hiccup, they always communicate X, Y, Z. So it's all comes down to the relationships, isn't it? And obviously the team, we've grown the team then as well as we've gone.
That's what I was just about to say. It's about when you get to a certain point where you're happy with everything, you feel like your infrastructure's at the right place, then it's about hiring someone who is almost the same person as you, so someone who can build relationships, someone who can do that sort of thing. And we've got a great team now who source deals for us on the ground, and they're great, and they've definitely leveled the company up as well, and enabled us to get more deals per month. I think when we were running it by ourselves, sometimes we were hitting really good months, but we had so many other things to do, like project management, all the other bits and pieces. But we've definitely leveled up to, we're getting approximately eight or 9 deals a month now, on average with the team. So that's pretty much how we've managed to do it, isn't it?
No, that's really good. I mean, that's great. I'm sure a lot of people, if you're not already, make sure you do go and give them a follow, go and check out what they're doing. They've committed today to be more active on social media as well. I'm sure you're going to be seeing a lot more content, a lot more stuff. I understand as well completely that with the volume of deals that you're doing, it is hard to find that balance between, okay, I'm finding deals, and before, when you're going on viewings and trying to make it happen, you want to show every deal. Whereas when you're finding 8, like you said, 8 deals in a month, you're literally just focusing on getting those deals in and out on pipeline and getting them across the line. But I definitely would recommend, making sure that you go and check them out if you are interested. Even, whether it's, investing in an area they already look at, or just you're trying to build something similar in your own area and want to understand just sort of the building blocks and the foundation to take a business in 24 months to the scale in which you've done, which is, really commendable. So again, congratulations to you guys. So then, I think although you've said, like, because you have said, try and focus on one thing, but then the other thing that you've done really well, which is the polar opposite of that, which is do multiple things and sort of have a lot more of a vertical integration structure within your business, in that you source deals, but then you also work with investors directly. You are also delivering, project management for those said deals for your clients, and then you were offering guaranteed rent. So I think that element of understanding that, once you do one thing and you kind of hone that craft, you don't have to limit yourself, and you can service some of the own demand that you've created by building a brand. How have you found sort of that in terms of, having that multi-tiered element to your business?
Well, I think we've run our BRRs in a way, because we've bought quite a lot ourselves as well. a lot ourselves, and they all come within the same sort of strategy. So the BRR, standard 3-bed terrace house that we use, we also source. So we buy them, but we sort of, you know, when we're ready to buy another one, we sort of pick it out the sourcing machine. It's the same with our flips as well. We pick the flips out of our sourcing machine. So, you know, we source and we also take on the same deals. So it's all still laser focused. In terms of like other bits and pieces, the only other things we've got on is essays, but we're not doing that much ourselves at the moment. We're sourcing quite a few at the moment, but in terms of like our own essays, we put a halt on that because of our laser focus. And we have got a couple that we did back in the day just for cash flow reasons to get us started and stuff, because it's a good way to get started in terms of cash flow. And in terms of our flat conversions, I suppose it's almost like a slight level up from what we do. It's just one extra level where we just sort of go, right, now we're going to add value in a slightly different way. And we also have a fantastic builder who's also a business partner of ours, and he makes it quite hands off for us, which is really ideal. So that's the way we've sort of stuck focused, and we keep it all within, you know, in a close.
We did have other areas. I know you mentioned project management, and we were doing that for a while. But we found as we were sourcing so many deals, that was becoming, we could see the pipeline building, and there was no way we'd be able to service all of those clients. So we started to tweak what we could do, and we're always looking at ways that we can better our service and how we can help our clients more. And I think one of the best changes we did make was to stop our project management, but we still do everything up to the point of handover to a builder that we've worked with. So we can still give everyone the support of, you know, creating that scope of works, negotiating that cost, reviewing the survey, doing all of those bits that some people tend to struggle with or find are their weakest part. And then what we will do then is we can hand them over to a builder who is dedicated to their project and or project manager, who will have a certain amount. So we know when we've got, say, if we've got 10 deals coming in 1 month, we know with our pipeline who they can be given to, and we're managing how many projects each builder has at one time. And it just means that we can then focus on continually sourcing those deals, but knowing those clients are still getting a great service. So we were doing that, but we have moved away from it.
Yeah, we thought it was the best decision.
Man, it's not like, it wasn't like that was a test, but that was kind of what I wanted to understand or hear more about, because I'm hearing all this. Well, you know, obviously I do my due diligence, and I'm seeing all the stuff that you do, and I'm thinking, yeah, it's a project manage, because you have to also look at, you know, we have to be efficient, because it's our business. We want to make, you know, as much money as possible with the relevant resources. And, you know, there's going to be less money in terms of the allocation of time and resources in a project management versus the sourcing of a deal versus doing your own deals. And I think that's something, a kind of a really good takeaway point for somebody that is starting out, or is currently running their own business, that actually sometimes, particularly one of the great things about COVID is that when things maybe slow down a little bit or there's a change in the market, it gives you an opportunity to pivot and actually take a look at your business, kind of look at each individual element of the business as a cost center and say, do you know what, as much as this is great and it's turning over, sometimes volume and cash flow doesn't always mean profit. And focusing, I think, you know, I don't know, I don't want to speak for you, but potentially if you didn't focus on saying, you know what, we want to do more of our own deals and less project management, maybe you wouldn't have got into doing the flat conversions at an earlier stage, because your builders would have been tied up on all these other projects and all these other commitments. And as you know, I see that, you know, there's a lot of integrity, and you want to make sure that you deliver that service for your end user, that you would be spreading yourself too thin.
Definitely.
Yeah, and we did. We to be honest, we probably made the decision a little bit too late, because of we were too scared to say no. We knew these clients were buying the sourcing the deals from us because they wanted us to work with them. They wanted us to oversee the project, because as we've mentioned, they've built the relationship with us over social media. And when we started to change the service, we were getting a lot of pushback. So we were so concerned that this wasn't going to work. But I think once we've done it, and I think it was impacting just us everywhere. We were running around like lunatics. we had some of our own properties sat empty because we had these builders out on client projects. And it was when we took a step back and we said, where's all the problems? Where's all of the headaches? And it all came down to that. And it was such an easy fix. And everyone involved then, by making that change, had a better service. I mean, we were working with one builder at one point, and you forget, one of the top tips I would give with builders is making sure you're not putting all your eggs in one basket, and don't spread yourself too thin, because we had one, and there was a builder running 6 projects, and it was going great, but then he fell ill and he lost some of the boys, and that was 6 projects on hold. And obviously we've been building the pipeline. It's not just those 6 that are impacted. They get labour, it's the ones coming through, and then it just becomes chaos. So
it becomes a good few months of pure stress and hard work to get it out. So I would, definitely, that's the biggest tip, is don't put all your eggs in one basket. 100%.
But since making that change, we're so much more, we're less stressed, and we can look at the bigger picture and how can we continually grow the business, and what else does the team need from us, how can we provide more support, and at the same time our clients are getting a better service, because as we mentioned, they've got people dedicated to their project. So definitely the best decision to make. Just
touching on what we were saying as well, I think sometimes you constantly want to grow, and you just constantly want to keep going up and up and up in this growth, but sometimes I feel like as business owners you need to sort of take a step back and sort of get your infrastructure right, make sure your service is right, make sure everything's right, and then go again, because otherwise you're going to get to a point where you're making so many mistakes that it gets silly. So I think that's a very important thing to do as well.
Definitely. I think two takeaways from that. I definitely think like taking the time to analyze your own business, and as much as your customer is king, and we want to service the customers, you don't want to overpromise and underdeliver. And sometimes say no, like the no might not sound good, like no, we can't do this, but no for the right reasons is better than yes for the wrong reasons. And I think really good decisions when doing that. And also I think you touched on just taking on the right people at the right time, because we did that documentary recently called Property Insiders, talking about people's experience in property and how they found things. And one of the takeaways from that was that if you don't take anybody on, and it can be really hard because our businesses they're your baby, you want to nurture them, they're yours, you don't want anybody else to touch them. But at the same time, if you don't take somebody on, your business only has the potential of you. Whereas if you on 5 great people, now you can potentially 5x your business and go and focus on what your real skill sets are. So I think that's a really good, obviously I'm not saying day 1 start your business, day 2 start trying to take on all the world. You have those busy periods, you're gonna have those long nights, those those working on the weekends, those 70-80 hour weeks, but at a certain point you have to realize that's not sustainable forever, and you've got to take on the right people at the right time to grow the business. And I think one thing that you touched on as well, George, was that people that kind of mirror your business ethos as well, replicas of you in terms of mentality, maybe not, just they have to be exactly the same as you, but have the same mentality. So are going to keep the kind of the whole company and brand ethos strong, and so that it can grow more collectively.
Definitely. When you're interviewing people, one of our key things was making sure we thought they would fit into the group. There were some people who interviewed so well, brilliantly, but we just couldn't see them fitting into the group. And I think that's one of the most important things, is making sure those people have the same values as you.
Yeah, definitely. So this has been really fun. Time has been flying, so we haven't got too long. I wonder, for those that are asking, all of the lives that we do will be saved. They come out on the YouTube on a weekly basis, because much like George and Hannah, super busy, and I'm a bit behind on the social media, so it's probably going to come out in a month or so. But make sure you subscribe, and you'll get a notification to say that it's come on, and you can come back and you can check all of this out. But one thing that I want to touch on, because everybody loves money, I guess it's their favorite, their trigger point of you. Over the last couple of years have raised a lot of private equity finance, or a lot of money to work with either specific projects or just raise money to do your own projects, etc. How have you found that process, and what advice would you give to people that are looking to try and raise private investor finance?
I would say it's my favourite part of the business. It's the bit I love doing the most. How much we looked the other day, to date we've raised just over 3.5 million.
Yeah, 4 million now with the new
4
project.
million, yeah. They're all for our own portfolio projects that we've done, whether they've been rentals, flips, the flat conversions. It was really funny. So when we first had our first ever deal that we were going to buy ourselves, one of our first investors was George's mum, but we needed to make up some of the extra money. So we put a note out to our mailing list, and someone came back to us saying, I'd be really interested in working with you on this and loaning you the money.
Just a quick one. They've been following us for about 5 months.
Kind of like what you said earlier, they watch you on social media. And we documented that journey, and we showed how, we've repaid this investor and this is how we use this money. And then more and more people started contacting us saying, can we do the same? And we offer some great returns. And it all comes back down to the relationship. So the relationship we've probably got, that all of that funds have been raised through 7 investors, and they're kind of our continual investors. We have rolling funds where we kind of circle out of one deal, we've got another one lined up for them, and it runs like clockwork. But in terms of advice for people looking to, raise finance for the first time, create your deal pack for it. But the most important point is knowing your numbers inside out. Know that deal, know your worst case scenario, because for that investor, it's got to work for them. What security can you offer them? How are they protected? And ultimately, what's the risk to them and how can you mitigate that? Because answering those questions and having those conversations show you've thought about those, which again is just going to make them feel more safe with working with you. And once you've done it once and you've repaid when you said you go into, when you've done all the right things, you can start demonstrating that on social media, and you'll find more and more people will start actually contacting you rather than you putting messages out to raise finance.
Yeah, you can also raise finance in different ways as well. It's seeing what that investor's after as well. Like some of them may be, they may be looking for some education, so you can sort of give them an earn and learn. Whereas some people might be wanting to put their feet up in Malaysia and just make an interest on their money. So it's seeing what they're looking for as well. But you don't need that many investors. You just need your core investors that you build great relationships with, great trust with, that they're just going to keep rolling on with you over and over again. And I feel like that's powerful. It's making sure you actually maintain that relationship. That's the most important thing, maintaining that relationship after you've started to build it.
I think there's a lot of key takeaways for people that are looking to build an investor base or build relationships with investors. I think definitely the idea that, once you have a good investor and you actually meet the requirements and do what you say and actually deliver, if you're offering a good return, a lot of the time people just, once you've got a relationship with somebody, it's why go somebody else. If you shop in Tesco's, you shop in Tesco's. It kind of takes a lot to take you away to Sainsbury's, even if the prices are similar. So I think definitely maintaining those relationships and actually deliverables. I think what you touched on in terms of actually understanding your deals and knowing your numbers. Worst thing you can do is tell an investor I've got a deal, and then they can pick 100 holes in what you're suggesting to them. I think ironically, I don't know if this was by design or just by fortunate, but also the fact that you started doing a lot of sourcing meant you had clients you were delivering and working with. So although they weren't investing with you, they could see that you knew what you were doing. So it was building a track record. So it's that same thing of that almost credit score with your investor base, whether that be through your social media or be through a way of engaging with them at an earlier stage. Because, there is it's not a myth that there is a lot of barriers to entry when it comes to getting into property, capital being probably the obvious one. But even if it isn't exactly, someone doesn't want to follow your model exactly, but the idea of sourcing to start with, to firstly understand deals more yourself, build relationships with agents, with trades, and also that can be what you use as the catalyst to build those relationships with your potential investors. I think by design, or did you just realize that was a happy coincidence?
It was by design. So we when we first started sourcing, the whole objective was to grow our own pot of capital to invest. But by being able to demonstrate, we were refurbishing properties, we were finding these deals, we were analysing themselves. That gave us, that benchmark to speak to investors, to kind of have a portfolio to show them of what we've done and what we've achieved, to give them that trust in working with us. And yeah, from there it kind of snowballed then, didn't it?
Yeah.
No, that's good. I think, look, I've had a lot of fun today. I hope, we've had a couple of hundred people dip in and out of today's session, but I hope everybody that has joined us today has got a lot of value. Quickly, if you want to just give out the actual wording for your social media, because some people might be listening to this on the Spotify Music or the Apple Music as a podcast later, just so they can find you, and let people know the best place to find you if they want to engage with you for any of the services that you provide.
We are Dugard Property on everything. So that's Dugard with 1G if someone is listening. I know a lot of people call it Dugard.
Yeah.
Dugard. But yeah, on all social media, Instagram, Facebook, probably the best to contact us if you've got any questions. We do have a website with some further contact details as well if you want to get in touch.
Amazing. Well, I appreciate you having you on. For everybody here, we are back now. Guaranteed content every Sunday. Dugard Property have also confirmed they're going to guarantee more great. If you haven't already, go and give them a follow, go and give them a like, go and check out. They've got loads of posts, loads of examples of their deals. Go and speak to them. I don't know how they feel about the Londoners coming down to South Wales and negotiate and find out if they haven't bought up all the good stock already. And great thing about them is, even if you do want to buy stock in South Wales, they can work with you to find a deal for you. Whether or not that's a flip, a BRR deal, they can find something that's going to work for your budget. And a lot of people, that come, like a lot of my following base are from London, and I get asked a lot of the time, like I've got X amount and potentially it wouldn't work for myself because the capital requirements in London. But you've got amazing opportunities to reach out to people all over the UK. But this is an opportunity in South Wales. So if you do want to reach out to them, I'd advise you do. I appreciate you coming on today, and we'll be back next Sunday. Take care.
And thanks for having us on.
Bye.
Bye.